Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, we've jumped right into earnings seasons with JP Morgan and Intel releasing results last night, and the market hasn't liked what it's seen so far, especially from JP Morgan. JP Morgan expressed concerns about their long-term credit, and Citigroup, Bank of America, Morgan Stanley all set to go next week, and we've seen a big pop in the VIX in expectation of those earnings reports. Over the last month, the S&P 500 really hasn't moved. It's moved on average about a 10 volatility a day. Only one day in the last month have we seen a move of over 1.5% out of the S&P 500. Now, if we look forward into the VIX, the February future is over 23 right now. It's pricing in an average daily move, one out of every 3 days, of over 1.5%. So people are expecting a fundamentally different market here in earnings season. They're expecting a lot of movement as results come out day after day after day, potentially market moving events nearly every day. Google next week, all those financials, IBM. In the VIX, we've seen one person who really doesn't believe that that sort of movement is going to happen. They're selling the March 2025 call spread. They're selling it for $2.30, then $2.25. They're hoping that the VIX stays low, stays below 20, where the cash is, and that the futures eventually track down there. If that happens, they'll capture the $2.30 that they sold the spread for. If the VIX pops over 25, settles over 25 in March, they'd be out $2.70, the other half of that spread. So that's what we've seen here. Expiration is just after the weekend. So we've seen interest in the Jan 22.5 calls and the Jan 21 calls. Seen a lot of trading on the Jan 20 calls. People are wondering if the market will continue to sell off and possibly the VIX could settle above 20 on Wednesday's print. That's what we have going here. This is Jamie Tyrrell with Group 1 Option Monster.